if you are entering in a 1031 exchange. I had a ton of a disaster associated with this, so wanted to help out wherever I can. Just as an example, I'm going to kind of read through this. I like to go into it with some expected numbers. With the 1031, and it's called a like kind exchange, we're expecting all profits from the exchange. So we sell, get rid of, exchange, whatever, one property, and we are putting that money into another property. We're expecting all the profits. Hopefully, we sold that first property at a profit. We're expecting all the profits from that sale, from that exchange, to be deferred until we eventually finally sell that next property or the next property or whichever property it is we sell. There's a couple details as to what's meant by profit or gains, but a big part of it is you've got the purchase price of the property, you've got the price that you sold it for. Think about those as profits. Those profits are cut into then by any sales costs like real estate agent commissions, transfer taxes, stamps, that kind of stuff, any improvements that you may have done, and the depreciation that you've had on the property since you've bought it. So just for some rough numbers, want to show what I mean by that. You're going to have some more exact ones. So middle of the year, 2018, we'll say I bought a property for $50,000, nice round number, and I sold, or in this case we call it exchange, that property at the end of 2024 for $200,000. When I bought the place, I made zero improvements. That's something that would be counted in the deferred profits. So I made zero improvements in this case. Right away when I purchased a property, I started taking depreciation. This one's a single family, so it's over 27 and a half years. You'll see that later on. With taking depreciation, you've probably seen this before, that only the asset, the building, is what's depreciated, not the land. So what you have to do is take that initial value of $50,000 and look at, of that $50,000 for the property that you have, what is land and what is the asset. So I went into the tax records and I saw that, just for this example, we'll say 50% was the asset, 40% was the land. With only the asset being depreciable, that $30,000 or 60% of $50,000 is what's depreciable. For a single family, it depreciates that asset value to zero over 27 and a half years. So 30,000 divided by 27 and a half gets you the $1,091 per year. What I can also do here is say I own the property for 6.5 years. How much did I depreciate it over that time? And it would be 6.5 times 1,091 or 7,091. And that's going to show up later. This depreciation comes into play because the taxable gain now changes. Instead of just 200,000 minus 50,000, so $150,000 in taxable gain, you're cutting off that depreciation. So think of it as it's making it I believe you might actually be adding that. We'll have to check. So it's either adding or subtracting it, but anyways, TurboTax does it. That depreciation is included in there, as well as the sales cost. I actually think there should be a plus sign in here. Come back to that one, but I don't want to change my recording. So now we have a new taxable gain based on that depreciation. I think that actually gets added in. I'm gonna have to fix that later on. But anyways, TurboTax does the calculations. Look for some of these numbers to show up in the future, the sales cost, the transfer, this number, the depreciation number, you'll have to enter that in. But at the end of the day, what I'm expecting is that TurboTax will show me zero taxable gain in this calendar year because it'll all be deferred. And I'll also have to take this taxable gain and bring it into the property that I exchanged with. So let's look at the TurboTax interview steps in order to get to kind of the answer here. So this is the steps for the exchange property. This is the original property that I'm going to use the phrase sold, but I exchanged to get the new one. I crossed out a bunch of stuff on my screen, but it's under wages and income. You'll have your property, and there's a section there under it called the assets, and this is where the depreciation shows up. So we'll go in there and we'll edit that guy. I already did this calculation, and for the calculation, it worked out to be for this calendar year $414. I sold it part of the way through the year. But just to go through the steps on how that's calculated, I'll come in, I'll say edit, put in a bunch of these numbers for the property. I'm just blanking out the address here. So it's residential, date I purchased it, residential, the total cost, the land cost, and that's just to recognize that what part is land and what part's the asset that's depreciable. 100% business, I don't live there. And this actually calculated conveniently that prior depreciation from all the years, so I didn't have to run that number. So put those guys in, hit continue. Did you stop using the asset really for any reason, taken out of service? Yes, in this case. So continue on. Disposition information, all I did was I blanked out the addresses up here, but what we've got is the date of sale, 4/15, the date of acquisition, and that date of sale is going to go in and calculate the depreciation for 2024. Any special handling required? No would be the answer over here. 1245 property is stuff other than real estate. I didn't use this for personal use, didn't give it away, wasn't destroyed. So no on all of those guys for us. It wasn't included in the sale of my main home. You may have different answers there. This was strictly a rental. This caught me off guard when I put the sale information in. I originally thought here to put in the property prices that I sold it for, the asset and the land. So in that example that I gave at the beginning, I sold it for $200,000. I thought I would have taken what the land is and what the what the asset is. But with the exchange, it's not actually considered a sale. So this one threw me off, just the phrase sale. So what we're actually going to do here is all of these get entered in as 0, surprisingly. So no values here on the sales information. Results, all I've got here is that depreciation for 2024 is 414. That's based on the original purchase price. What was any improvements that I may have included in it, and how many days I had it in 2024, along with what part of that original purchase was the asset and what was the land. So I've got now a value for what my depreciation is for all of the years that I've owned that property. I then go into the next part, and that's the sale of business property. And this is a tab in TurboTax as well. So there's a field here. You've got all of your different wages and incomes, but you can add in one, sale of business property. So you come in here and go to edit for sale of business property. Conveniently, it asks the question right away, any additional like-kind exchanges? And that's what we're doing for this property sale. So like-kind exchange. I'm going to select that and go continue. I've already gone through this for the property, but all I've got here, this is the property address I blacked out. After I did all the calculations, yes, it worked out conveniently. I've got a deferred gain and a deferred loss over here. And that's what I'm looking for, is every bit of it to be deferred. I ran the calculations already. That's why mine's filled in. Yours would have all blanks, and you would actually click the Add an Exchange button and go in and say Edit. You enter in the address of the real estate that was given up. Got that. So just physical address, nothing special. Here's some of the previous numbers that we may have seen. Date we purchased it, date we transferred it to the new owner, adjusted basis of the like-kind exchange. Take a look at that additional link when you get a chance, just to see what that means for your particular property. Mine was adjusted from the full purchase price, and this is where that depreciation number comes in. subtracting out that depreciation that we had for the example I said 6.5 years. So I probably purchased it in and around like the 58 all-in number, and that dropped it down. Same number over here, and then when I sold it, this was the fair market value. So that was the price. I don't know where that actually shows up in the final form, but that was the price that was agreed upon with the buyer. It wasn't actually the final number that I received, and we'll see that there's a bunch of those darn real estate agent commissions that come into play and other things. Check the box. This like-kind property exchange was used in a trade, business, or rental. That was the case, at least for mine. It was a rental property. Now enter in the property that was received, address of that guy. Conveniently, the fair market value of that like-kind property received, the purchase price of it was higher than the property that I was getting rid of. That's going to be needed. Date you actually received the property, got that written down. There's rules when I could have identified that property in relation to the sale of the other property. So just keep those rules in mind. So there's the date. And any loans assumed, no loans assumed with this particular one. Conveniently was able to pick it up in cash, both the cash from the proceeds of the previous one and a little bit extra in the bank. You may have a loan in yours. Any related parties, click the link if you need more information. Didn't buy it from family in this case, out in the open market. Different property given up. I did not have any other different property. It was just physically the real estate. So I clicked no over here. If you did receive different property, you would put that in here. I got a little confused on this one with the cash received. I originally thought that was going to be the money from the earlier sold property, but it's not. So unless you received kind of some other stuff outside the normal traditional sale of just rental property or residential property or commercial property being sold and getting money, nothing goes in these forms. The exchange expenses, these are sales expenses that I had to pay, those real estate agent commissions, transfer taxes, all that fun stuff. So right away, it says to me, conveniently, based on those numbers, I have no taxable gain. So good stuff on that one. Unless you made this exchange with a related party and one or both of you disposed of property, which is part of the exchange, you have no taxable gain. So I followed those steps correctly. Continue, a couple more questions. It tells us then the number, your deferred gain as a result of this exchange, and jot that number down because you're going to need it later on. So $132,895 for regular tax purposes is the deferred gain, and that's great because I would have been taxed on that value this year at least. It also has a new property basis to be calculated, and TurboTax does that, 103,777. For the numbers down below, in my case, it was just 1250 property. That's physical land property. 1245 are other properties or other tangible items received other than real estate. So I did not get any of that. All of that 113,777 goes straight down into that number, and nothing else was received in my case. And for this one, no need to report. I originally thought there was something to report it on a Schedule E, but it does just get reported in the 1031 like-kind exchange, and that's it. So no entry needed, and that's checking with the TurboTax pros who helped me on this. What we're going to do next is we had all of that deferred gain. We're going to add it to the new property that we've got, and that's going to keep carrying over and over until we eventually sell that new property or transfer it again. So we'll come in to the new property. I've added it in. I've got a couple different numbers here, and we'll come down into assets where that new property is, that new rental property, and we'll edit it. This is typically the field where we do the depreciations in. So we'll come in here under assets, new rental property, and we'll select edit. Give you a little pat on the back for renting it out for the first time. Good stuff. You need your HUD-1 coming up. So continue there. This was not my residence in the past, and yes, I did purchase this property. I thought originally we clicked through this with the TurboTax Pros, said no, I acquired it in a different way, and they actually had it through a 1031, but there's a different form that accounts, or a different question in the interview that accounts for that deferred gain. So, yes, you did purchase the property, which was a little confusing when we went through it. Tell you again, they're going to get some details about that particular property. So jump right in. Here's the purchase date. It was available right away. There was the original purchase price. That wasn't the offer price, but there are some additional numbers on that. This is right out of the HUD one. Abstract recording, legal fees, all those numbers you'll add in. If you did any improvements, you check those boxes. I did not do any improvements on the place. Continue. Here's where you now put in those postponed profits. So a bunch of slides ago, we had those deferred gains from the previous sale. This is where it gets included in. That 132 number that I told everyone to write down. So it's funny, TurboTax says these are uncommon, but we have to ask, well, this is the 1031 exchange that we're doing. So 132,895 for my example goes in here. Click continue. TurboTax calculates now the cost basis. That's going to be based on the purchase price, what is land and what is asset, and that deferred gain that you've got. Based on that purchase price, there's an assumed land value, and that was again off the tax records. So tax records will say a land and asset, multiply that by the purchase price, throw those numbers into here, so you'll have to do those calculations. And recognize that 165 number, that improvement value, is going to be what gets depreciated. TurboTax does a little bit of math coming up, figures out that cost basis for you and the depreciable basis, including in that deferred gain that you've got. So I converted a residential into a commercial, took that deferred gain, brought it over. TurboTax did all the math, and now they're saying, since it's commercial, that asset, the asset, the building, is going to be depreciated over 39 years, and that was the full value of it. So they did a little bit of math based on the date I purchased it, the purchase price, all those previous slides, and got the rental expense deduction, the depreciation for this particular year. So a lot of steps. Hopefully that helps. Hopefully that helps with the flow. Yeah, give me a thumbs up on TurboTax. Thanks.